again. This is Merle Denbath, the Conch Economist, and what follows is part one of an interview that I had with Mr. Grant Couch, a Wall Street veteran, and we recorded right after the market closed on February the 20th, Friday, February the 20th. And part two of the interview will immediately follow this. So there will be part one and then part two. I know you're going to enjoy it. Well, hello again, and welcome back to the Conch Economist. And we are broadcasting today from the Conch Republic, Key West. In fact, most of the presentations that I've made over the last 2 months have been from Key West. And today I'm really privileged to have a good friend of mine who's also a financial expert, Mr. Grant Couch, who is going to be sharing his insights with us on the week that was. We've had quite a week. Grant, hello, and tell the audience a little bit about your background.
Sure, Merrill. I would say first that the honor is mine to be here with such an august, cool, calm, and optimistic Conch economist.
No.
Yeah. Anyway, so my background, born in West Virginia and born in a family that taught me fiscal conservatism. I really grew up being very careful about a dollar, fortunately. So I took that sort of fiscal conservatism into my career, trained as a mechanical engineer, got an MBA, went into banking. And while I enjoyed banking and it was a great education, I wanted to make money, and commercial banking is not the best way to make a lot of money out of finance, because as I said, I wanted to make money. And it was a wonderful experience for me to step into trading. And my focus in Wall Street ended up being in fixed income stuff.
So you were in New York now. You left West Virginia. And
well, yeah, my parents had moved to New York when I was in second grade, and so I went through school in Westchester County, Larchmont, Mamaroneck area. For those of you out there who know that, I went on to Lehigh, got an undergraduate mechanical engineering MBA there, and what I found perfect fit for me in terms of trading, what I'd always say is it's a great place for people with short-term attention spans, because you always had an answer right away. You make a decision and it smacked you upside the head or it patted you on the back. Do more of this or less of that. But I continued to follow the markets, and I really loved the challenge of it. It was like going to war every day, but no one got hurt. And if you did it right, you made lots of money. If you and I watched it happen. If you didn't do it well, but you were jovial and a bonhomie kind of guy, and you got fired because you lost a lot of money, someone else would usually hire you to do the same thing on this sort of zero-sum game principle. Okay. If you've lost a lot of money over there, maybe you'll make a lot of money for us, and you're a good guy. I mean, it was crazy business.
Change your employer, change your luck, right?
Yeah, right. Well, it was.
Now, who were you working for? Were you your own firm, or
no? I was always a hired gun.
Okay.
Which made it easier, because the joke we used to say, I was working with opium.
Other people's money.
Other people's money.
Yes. Okay.
And it made it a lot easier to be somewhat more cavalier about losing $1 million in 30 minutes, as I did one time on a bad trade. Try to help somebody out, and I just walked into something. But I've got a real appreciation for how hard it is to make money, how easy it is to lose it. But I'm a capitalist, and I'm quite happy to just say that up front. A strong capitalist. I'm an Adam Smith guy.
Yes.
And I think that it's got its problems. And I've had these debates with folks who have different ideas of how the economy should be organized, and and they have lots of complaints. And there are things that are wrong with capitalism. It definitely needs guardrails. Let people do their own thing, and we're going to all be better off, in my opinion. And I haven't seen any proof to otherwise.
Well, you mentioned Adam Smith, and this is a good entree into the events of today. We are recording this on Friday afternoon, and this morning the Supreme Court made its ruling about the tariffs that President Trump has imposed in the past, and they have ruled that he should not be doing that. So what do you think is going to happen? The market closed in a rousing rally today. The Dow was up 200 points, I think.
Yeah, 230, I believe.
And the NASDAQ was up another 200 points, the S&P. So a lot of the market did not panic today over this. If anything, it was positive. for the market. What's your reaction to this?
Well, it's funny, Merle. I think I should share with your audience that a little less than a year ago, when the tariffs were first put in place, we were having lunch and we had very opposite views about what the tariffs would do. I was very clearly and very comfortably of the view that the market had to go down because the man in the White House is continuing, and it's certainly proving the point since then, to be a great chaos manager. And chaos
Or
is
creator.
chaos creator. Yeah, he doesn't manage it. You're right. Yeah, sorry, chaos isn't managed. Good point. And my experience in the business world, I'm in the financial world, but with friends who were in business and in the banking side when when I was helping finance people, no predictability, uncertainty is not the businessman's friend in terms of
No.
investing, whether you're investing for short-term inventory carriage or whether you're building a big plant that's going to have a 40-year life. So that, I thought, would cause business to shrink as people withdrew. I've been absolutely wrong. I can't figure it out. And where we saw the market initially go down a lot with tariffs, it rebounded and roared back, new highs, new highs, new highs. And so today, I'm not surprised it's up with that announcement, because it sort of
It went down. It went down the other way.
But on the other hand, I just I don't know. But I would say I was relieved that the Supreme Court held the case as they did, or determined the case as they did, because I'm not a fan of tariffs. I mean, tariffs fall to me within that sort of capitalist. If one looks at them as a capitalist, I think that tariffs are, as a flat case, a bad idea. I'm a big fair trade guy, with the caveat, just like my view of capitalism, free trade needs guardrails too. And I think one of the biggest guardrails that we have ignored in the past, and I think is showing up in a chaotic kind of way now, but necessarily, is national security.
Right.
That we cannot depend on our adversaries for critical materials for our defense, clearly, right?
Right.
But there's many other things that we need to be mindful of in terms of how we offshore all kinds of things.
Right. As an economist, part of the principles of economics is the concept of comparative advantage with reference to trade, and even absolute advantage when we talk about trade. And economic theory supports very strongly the idea of free trade among nations, that nations should specialize in what they can do best and sell what they cannot use themselves to others, and others get the benefit of their specialization and efficiency. Now, of course, there are some assumptions there, and one of these is the assumption of a relatively benign international environment in which people aren't hostile toward each other. And unfortunately, of course, we don't always have that.
Never.
Unfortunately. And so there's your guardrails. You promote free trade where you can, but the important thing is to remain free, period. And sometimes that requires protection for defense industries and other industries that are critical to your own national survival. But there were several things that happened this week in addition to the Supreme Court ruling today, and that has yet to be played out. As we sit here right now, we don't know what the refund mechanism, if any, is going to be. We do know that the president is trying to use some other powers to impose at least short-term tariffs. I think I heard it was 10% in some other policies or some other provisions of law that he can use.
122.
Yes, but there were some other events this week that also are worth considering. For example, we got some inflation data which really didn't show a strong trend one way or the other. So we're clearly not at the 2% inflation goal, but apparently we're not edging up too much toward 3%. Well, that concludes part one of my interview with Grant. Part two follows immediately, and in a separate video. It will be identified as part two. And thank you for watching, and please subscribe.